Welcome to the Lending Brief podcast, brought to you by the GovNavigators and sponsored by Allocore. Allocore brings the precision and expertise of commercial banking technology to the public sector. From preventing fraud in small business loans to reimagining how Treasury processes payments, our guests share firsthand stories of innovation, challenge, and impact. Whether you're in government, financial services, or technology, this series reveals how modern lending platforms can better serve the public and protect taxpayer dollars. Welcome to the Lending Brief. Adam, welcome to the Lending Brief.
Wait, what's the Lending Brief?
I'm glad you asked. The Lending Brief, brought to you by the GovNavigators and sponsored by Allocore, which brings the precision and expertise of commercial banking technology to the public sector, is all about the government's vast loan portfolio.
Wow, this is going to be a long series.
How many loan programs, how many credit programs do you think there are in the federal government?
I think we should have an over-under on this so we can actually, we are employing a bookie, obviously.
This is Price is Right. What do you win if you're right?
That's another great question. Maybe a lending program.
A new car!
I'm going to say 143.
I think our friends at Allocore think it's like 175 or more.
I feel like there's all these stealth, like shadow lending programs.
Anyway,
this is fascinating.
This is a deep dive into the programs across the government that are helping American citizens accomplish varied missions, grow their business, recover from a disaster, build great new innovations,
go to college,
own a home. It's an unsung part of the government's portfolio that I can't wait to dig into.
Yeah, and I think it's really important that we're highlighting it. Not a lot of attention gets paid to it. And honestly, I've learned a lot by doing it.
So Adam, we were challenged to see just how deep and bureaucratic we could go.
Challenge accepted.
So we've launched the Lending Brief to take a look at the government's 130 plus lending programs. And if you're asked to go deep and bureaucratic, who would you pick as your inaugural guest?
Doug Criscitello.
Bingo. Welcome to the Lending Brief, Doug.
I love it. You guys have picked a great topic for your first session here.
Well, our many listeners will be the judge. Tell us a little bit why you're the perfect person to speak on this topic.
Yeah, so I've been immersed in federal credit programs throughout my career at oversight organizations like the Congressional Budget Office and the Office of Management and Budget. I've also run credit programs at some of the big lending agencies, including the Department of Housing and Urban Development and the Small Business Administration. And in recent years, I've really focused more on the study of federal lending programs through roles at both MIT, where I operated a center there focused on government lending programs. And currently I work at Arnold Ventures as a fellow with a focus on looking at the efficiency of government programs generally, but my area of focus has really been on government credit and insurance programs.
I love it. The Federal Credit Flex could have been an alternate name for the podcast.
It's true. It's great.
So Doug, I remember a few years ago, I think we were at a happy hour, I can't remember, but you started talking, you said, I've just been looking into the data and the future is lending, the future is loans for government, and government is going to do everything in this. So you were onto this pretty early, I think, before a lot of people, even as the wonky followers of us, were onto it. Tell us a little bit to try to encapsulate what the size and scope of the lending portfolio is in the federal government right now.
Yeah, in nominal terms, without adjusting for inflation, government lending programs have been increasing in number and the volume of and the dollar volume of credit extended for decades. This goes back to the 60s or 70s. There's been a pretty steady growth. But more recently, I'll say, let's call it the last 3 decades, The growth has really accelerated, particularly in the wake of the 2008 financial crisis, which was really a credit crisis, right? There were a number of different segments of the economy that retrenched from lending. And here in the US, the government stepped in to ensure that financing would still be available for things like higher education, home ownership, small business formation and growth. So what we've seen since 2008 is a huge acceleration in the volume of loans that have been originated through an assortment of agencies across government. Robert mentioned there's over 100 programs, and actually there are a number of new programs that have been stood up in recent years. So I think we're likely to continue to see the growth of these programs, particularly because loan programs have become really a preferred funding mechanism. Because they have an inherent advantage, right? Most loans are repaid. So if you compare it to other forms of financial assistance like grants or tax breaks, that's all money just out the door. We're getting none of it back. But most loans that are extended by the government are in fact repaid. Um, so they travel along a path of what I call least budgetary resistance, right? It is very economical for the government to extend loans, again, from a budgetary perspective. In fact, 3/4 of loan guarantee programs across the government have no explicit budgetary cost at origination. So, I think this is one of the few areas where elected officials from both parties are generally supportive of government efforts to lend into these various areas, particularly when there's no budgetary hit from doing so.
It sort of greases it on the legislative side to be able to get things through faster
Yeah,
for that regard. Yeah.
yeah, absolutely.
But there's also a policy objective here, right? The government's filling a role that the market isn't. So paint us the picture of the loan landscape across the federal government and how much you think it's appropriate to focus on the policy versus the operations. How well are we doing meeting the missions of these various programs?
Yeah. Well, great question.
Thank
Uh,
you.
po- Policy and operations are very much intertwined, inseparable, in fact. So policy tells us why we lend, the purpose of a program, and the operations determine how we do it or how well we do it, really. Um, as as someone that's worked at OMB and lending agencies, uh, I on that success really depends on aligning those two worlds. So a new program might look great on paper, uh, and have laudable policy goals, but without solid operational design, and that includes data systems, risk controls, loan servicing infrastructure, you can really end up with inefficiencies, unintended fiscal exposure, fraud, failure, bad things. So policy and operations need to be joined in an effective way. Personally, I'm encouraged by what I'm seeing in this community right now. Some of it's forced out of necessity. Yeah, obviously, we've seen downsizing of the federal government, and that's forcing federal lending agencies to increasingly rely on technology and modernization. Um, and I think, look, there's just a real commitment that I'm seeing to use these technologies and advanced analytics and machine learning tools, not just to process loans faster, but to inform policy decisions with sort of richer real-time data. So It's an exciting time to be working, whether you're on policy or operations. I think we're seeing a convergence of those two areas. Um, so yeah, good time to be working in this space. Very interesting.
So, and Doug, has the influx of additional resources or authorization to lend more had an impact? Is that another factor that's forcing agencies to seek out technology to process the larger portfolio that they have faster or and more efficiently?
Yeah, I think there's a lot of factors contributing to sort of the move toward um, an increased reliance on automation. I think the private sector is, yeah, I get probably not surprisingly, the private sector is leading here. Um, but I should make, I mentioned the 2008 financial crisis earlier as a bit of an inflection point where lending began to really accelerate. But we should also talk about the COVID pandemic. And in the midst of that national emergency, we saw lending programs once again that accelerate dramatically. There was a reliance on the federal government to either provide loans or loan guarantees, probably most notably through the Paycheck Protection Program at SBA that originated nearly $1 trillion in loans. And, for an agency in a typical year, SBA does about 50 billion in loans. That's a great example of an agency that had to embrace technology um, to handle that task.
Yeah. When the
Uh,
trillion wasn't even over a year, right? It was in like 7 weeks or something like that.
I'm counting, but there were two
That
significant
in the second
tranches
part.
of
Yeah,
money, one in
sure.
March and one in December of 2020. Um, but yeah, just huge amounts. So, I look, SBA is still experiencing some difficulties in sort of closing out those programs. There were trying to stand up a new program and disperse $1 trillion in a handful of months is a huge undertaking. But I think it's a good illustration. If you look at SBA's infrastructure today and their use of data analytics and AI tools, they're far beyond where they were prior to that emergency. So, a crisis is a terrible thing to waste. I think it's some credit agencies, and I'd extend it over to the housing agencies as well. We saw sort of an acceleration of adoption of sort of modern ways of doing business. And um, and we are going to see that continue. I'm very confident of that. There's no let up in demand for these services by federal agencies. There's fewer folks working at the agencies. We have to embrace technology uh, to get the job done.
Yeah, there's demand by legitimate actors, but also illegitimate ones.
Yeah.
The these programs tend to attract fraudsters to a degree at or greater than other programs. And it begs the question, I think technology is part of the answer, but there's so much data. You need to verify eligibility quickly of enormous populations. You need to screen out people who are going to defraud you. You need to monitor these populations to make you're serving these loans. How do agencies handle all this data?
Well, so I could tell you how agencies handle it now or how they should handle it. This gets me excited. I think this is
I knew we
such
had the right guy. I knew
Yeah, this
yeah,
is such an
nailed it.
opportunity. So let's talk about data and government credit programs, right? Data is everything. Agencies collect these mountains of it, right? Borrower histories, repayment patterns, um, sort of economic conditions, macroeconomic indicators, but it also isn't leveraged to its best use. It can sit alone in a silo somewhere and isn't leveraged the way that it should. And the technology that we now have, then AI comes to mind first, but these machine learnings and are huge and ever increasing ability to handle data, whether it's structured or unstructured, we can now spot early warning signs of default. We can detect fraud. We can refine loan performance expectations in real time. And again, as I said, in the private sector, it's become standard practice. And while the government has some catching up to do, in some ways it's advantaged in that it has more data than any other lending organization on planet Earth. So the thing that makes me excited is thinking about a federal credit intelligence hub. That's I guess trademark pending. No, I like thinking about having all this data as an intelligence hub that could serve as a centralized platform for agencies to understand and manage their credit programs, right? Sort of pulling all this data together and giving actors at an agency, at oversight organizations like OMB and congressional authorizing and appropriation committees, the ability to see what's happening at an agency. And it's three layers. It's data. That's where you need to start. On top of that, you build an analytics and visualization capability with sort of neat stuff, interactive dashboards and reports to monitor performance. And then really neat above that is a policy engine, right? That allows you to model the effects of policy changes, legislation, even do scenario planning with what if the economy goes this way or that way? What happens to our portfolio? So this is neat stuff. And the thing that makes me so excited about it, especially thinking about AI tools, it can be used in very different ways by different users, right? You could think of an economist looking at this data with, trying to assess the sort of relative costs and benefits of a particular program versus just an elected official who just wants to keep an eye, hey, what's their default rate doing? How are they doing on that front? Or what does fraud look like at this agency? Are we seeing an uptick, or is fraud trending downward? So that's so excited about the world with. Go ahead.
Even how many people in my district applied for this
Oh,
program or that program,
absolutely.
right? And
Yeah,
because I think
that's a
there's a
really
lot of
important.
education to do on that front too, about not just how well is the program running, what are the nationwide metrics, right? But what is the locality? Why is there a spike this month in this state for this program, right? I think having more real-time data for policymakers, I think, would really improve not just the oversight, but how they modify programs and create new ones in the future too.
Yeah, I think that's a great point, Adam. And it's also important to see, is your community getting its fair share of assistance, right? So, and there's there's already some tools out there that help you with that. But yeah, I'm excited to think about pulling all of this data together, at least on an agency by agency basis, but I think ultimately sort of across government, to have all this data in one place. It helps on so many different fronts, including, importantly, right, teaching private lenders how to lend into these markets, right? They could mine the data to make determinations about where and how they might be able to lend that they haven't done in the past. So some programs, I tend to think about any government program we should always have a sunset in mind, right? Well, I shouldn't say almost any government program. Just, if we collectively as American citizens decide we want to create a lending program for a particular social purpose, I think there should be an exit strategy. Okay, we're going to do this for a while. Hopefully the private sector can take some lessons from what the government does and learn how to do this without explicit government support, or at least to be able to back out some of the government support.
Yeah. So I think that we've really hit a crescendo when Doug Criscitello starts to sound like Ronald Reagan.
I'm having flashbacks to Sunset Commissions.
Yeah.
Yeah.
Well,
so yep.
Let me ask you this question.
I can't do a Ronnie imitation. I was gonna. No, I don't have one.
So you painted a great picture for this platform, but in my experience, the loan silos have resisted that kind of sharing, that kind of oversight, consistent oversight of their operations. Do you think we're ready for that?
Again, I think it's a necessity. I know that these agencies have various stakeholders that sort of jealously um, guard the status quo. Uh, but given what we're up against, again, I'll go back to that notion of crisis is a terrible thing to waste. If you view the downsizing of government as a crisis, which I personally do not, but some folks view it that way. So, um, I think uh, agencies need to act they need to act in some respects differently. They have to be more um, welcoming of technology, and I think they are. I'm not supposing this. This is what I'm seeing. There is an embrace of technology, um, but again, you absolutely need to be mindful of stakeholders, how the program operates currently. Um, you don't want to you don't want to disrupt without benefit. Um, but creative destruction can be a good thing in this area.
Doug, this has been a tour de force on federal lending programs. We really appreciate you joining and continuing to educate me, at least, on not just the scope of what's going on, but the trends that we're seeing right now. And it's been a delightful conversation. Thanks so much.
Yeah. Yeah. Thanks, Adam. Thanks, Robert. I enjoyed it.
Thanks for helping us launch the lending brief.